to today's morning coffee with Mike. Today we are talking about the roadmap for beginner traders. We opened up the mailbag yesterday, and we started to go through and asked everyone, what are some of your questions? And the feedback that we got, uh, there were half a dozen questions on basically what is the roadmap for beginner traders. So if you're here watching this and you're a beginner, type into the chat. Let me know, and let's get started. So, roadmap for beginner traders. It's really one of the key reasons why I wrote this book, The Trading Mind Wheel. The reason why has a lot to do with me not wanting you to have to go through all the struggle that I went through. I struggled for 10 years before I had any kind of progress whatsoever. And it was because I did not have that roadmap. So that's a big theme in this book. The first part of it is has everything to do with our mindset, right? So many people come into trading and they approach it with the belief that I'm going to take a little bit of money, I'm going to put it in, and more money is magically going to pop out on the other side. And not only that, that riches will magically pop out on the other side within a couple of months. Hell, there's so many people on Instagram and everywhere else, TikTok, talking about Lamborghinis and showing all this lifestyle. It's easy. I learned the hard way that it's not, and that was long before TikTok and Instagram and all this. I started out in '99, and for those of you that don't know, '99 was the tech bubble where you could throw a dart, everything went up. In a similar way to 2020 in COVID, where you threw a dart at a stock and everything just kind of went up. Well, during the tech bubble, it was even more so. And I went to my local bank and I didn't even know where to invest in stocks. I just knew that, well, you have some money, you put it in, more money magically pops out the other side. So I went to my local bank and I asked them, I want to put some money into the market. And they said, whoa, kid, you don't want to do that. You don't want to do that. Stocks are way too risky. What you want is this. And they handed me the prospectuses for a bunch of mutual funds that they were selling. So I sat down. I started to go through all these prospectuses about their different funds. So I'm sitting there for about 5-10 minutes, and then all of a sudden, the manager walks by. Hey, kid, well, what are you doing? Oh, I'm reading these that other guy handed me. Nobody reads those. Oh no, okay. And so I go and I pick a handful of them, right? I pick a couple of stock funds, I pick a bond fund, and I think that I'm being smart. So I'm being smart because one, the market is risky, and I want the pros to manage my money for me. That just made sense. Then I'm going to have loads of diversification, right? Because each one of these funds had about 100 or so different stocks and bonds in them. Great. So now I'm diversified. And I'm going to put this money in for a long time, at least 3.5 years until I graduated college. I started my bachelor's in '98, and I was going to graduate in the summer of 2002. Great. So I had all this time on my side. Then, after about 3 months, I go and I check the mutual funds, and the whole account is up about 10%. 3 months, 10%, not bad. So I'm thinking, man, I'm a genius. I should have done this a long time ago. And little to my knowledge, everything was going up, right? So 10% over 3 months was nothing. The market was up maybe about 40% at that time. So what do? I let it ride. And I trust that the pros are managing my money for me. I'm busy studying and graduating with my bachelor's degree. And now it's 2002. I go to check my account and I'm expecting to see all this money, expecting to go off and buy this Jeep that I had my eye on. Do you remember like the Jeep Wranglers where you could take the doors off the side and just kind of go down to the beach and have a good time that way? Well, I did not have enough money for that cheap. I did not have half the money for it. I did not have the money that I started with. I was down about 20% after 3 years. 20% down after 3 years. How in the heck did this happen, right? I handed my money over to the pros, and the I was widely diversified, and I had all this time. All the things that they said that you're supposed to do, I did, and I didn't have the results. So, what in the heck happened? Well, basically, what they told me was a bunch of BS. Right? Like it's things that would work for them. Oh, and by the way, that I still had the privilege of paying their management fees for them to take care of my money for me. So this sent me off on a wild goose chase, and a wild goose chase that would last about another 7, 8 years of trying and failing, trying to learn all these different kinds of things. And it wasn't until I finally started to model success and finally started to adopt some of the right mindsets for trading where things started to improve. And that was just the start. And so that's really why I wrote this book, because this is sharing not just my own personal journey of how I started out and eventually made it years later, starting as somebody that's a retail investor, right? Like just like you guys that are watching this, just starting out, taking some money, putting it in, and then eventually being able to leave the day job and now do this full time. So I put all that stuff into the book, and there's certain skills that we need to acquire in order to do well at trading. The first is mindset, and the reason why it's called the trading mind wheel. I don't know if you can see the cover, but at the center of it all is mindset. All these other skills are all interconnected, and mindset is at the center of it. And the reason why is because we have beliefs about everything. So let's say uh, you have certain beliefs about journaling, right? Journaling is one of the essential skills needed for trading success. But let's say you think that journaling is a bunch of bullshit, that it's a waste of time and you don't want to do it. That's how I felt for years. And it was one of the things that held me back. So until I started to shift my beliefs about journaling, I wasn't able to do it, and I wasn't able to do it well. I would start to journal, I would half-ass it, and I wouldn't have anything that I would able to be able to take action on and start to improve my results. When my mindset started to shift about journaling, that's when things started to improve. Again, Trading Mind Wheel books talks about all that stuff. So that's why I wrote this. And this really is the roadmap for beginners, because it's going to teach you the mindsets about the different skills that you need and give you insights on all the different skills themselves. So the 8 essential skills, mindset is the first. Then we go into journaling, right? Journaling as the first thing, because if we are going to continuously improve, we need to start tracking things. And even if we don't have a a, a real clue of what it is that we want to do, like how we want to trade, well, it's important to still start the journaling habit and start it right away and understand that our journaling will evolve with us. Great. Then once we start to learn a little bit about journaling, then we go into the analysis part, right? Analysis is a skill, and it's one of the only popular skills that everybody kind of knows about, that oh, I need to do this technical analysis, I need to do fundamental analysis. Well, all that stuff is great. We want to learn the type of analysis that uh, is important for the styles that we are going to trade. And so in there, right? So this is a part that's universal, no matter what it is that you're trading, no matter what time frame it is that you're trading. We all need to learn about the how to analyze the trade and how to analyze the environment that the trade is in. So let's say that you were to walk into your grocery store, right? You walk into the grocery store, you walk in, and it's like a bomb hit the place. It's totally ransacked. There's stuff on the floor, and there's barely anything left on the shelves. Is that a good time to buy? No, right? That's the time when you go and you turn right around and you leave the store. You can do the same thing with analyzing the market environment and trying to assess, is this a good environment for me to trade? And if I find that loaf of bread that looks like it's been stepped on, should that be one that I buy? Well, you be the judge. But that skill set of understanding the environment that the trade is in, as well as the trade itself, those are things that I talk about in the trading mind wheel too. So if you are a beginner and you are looking for a roadmap, this is going to be your starting place. This is going to help you not just understand the market and the mindsets for it, but understand the different types of skills that you need to acquire. Understanding risk, understanding position sizing, important skills too. Understanding how you're going to manage a trade, how you're going to manage your overall portfolio, understanding the entire risk that you're carrying in these things. All that stuff is absolutely critical. Then later on, when it comes time to figure out, well, how am I going to continuously improve, right? I've built some of the skills, I'm learning. How do I keep on improving? Well, there's certain other skills that you need. You need to understand post analysis. You need to understand testing, and not just how to back test. That's an important thing, but you need to understand how to factor model. You need to understand back testing, and you also need to understand forward testing. Now, what are those things? Factor modeling is taking a look at what already works and trying to reverse engineer, well, how did this thing work? It's what all my mentors, that were the mentors that finally uh, got me to where I am. That's exactly what they're doing. So I'm talking about William O'Neill. I'm talking about Mark Minervini. I'm talking about the entire lineage of that group. Mark Minervini, if you guys don't know who he is, he's a two-time U.S. investing champion, best-selling author, and he also wrote the foreword to the Trading Mind Wheel. So yet another reason why you should go grab this book now. It's on Amazon, Barnes and Noble, Target, wherever books are sold. And if you go to tradingmindwheel.com, there's a whole bunch of bonuses, including a free virtual conference that is being held on April 4th. That's 1 week away. So you're going to want to go and be a part of that conference. It's a full day conference. Mark's going to be there. I'm going to be there, and a load of other speakers. It's incredible. It's free, and go to tradingmindwheel.com to find out more. So the roadmap for beginners, it's really all outlined in this book, and it starts with you adopting the correct mindsets for trading, and it also involves you understanding the various skill sets that are needed to master trading. Because if you are not aiming to master trading, then you are approaching it like a hobby, and you're going to get hobby-like results, which is basically the same kind of results that most people get, which are you lose over time and you waste time and money. So that is uh, the basic roadmap in a nutshell. Let's take questions. Let's take some other questions here. See, a lot of people had joined in while I was explaining the roadmap here. Let's see what questions came in, and we'll stick around for another moment or two. While I'm scrolling through this, I'll grab a sip of coffee. This is the morning coffee with Mike show, after all. Here's a question about Elliott waves. Thoughts about Elliott waves. So Elliott waves are a semi-popular indicator. It's an indicator like all other indicators. So pretty much every technical indicator is based off of price, volume, and time. And so we could really choose whichever indicators we want to use, whether it's going to be Elliott wave, whether it's going to be Fibonacci, extensions and retracements, whether it's going to be simple moving averages. All these things are going to be based off of price, volume, and time. Some combination of those three things. So the important thing with any indicator is that we use it consistently. Because it's in the consistent use of the indicator that we start to pick up on the nuances of how price behaves around those indicators. And it's those nuances that we start to pick up on over time that will help us to identify the better trades, the higher probability trades. So if you're using Elliott wave, if you're using moving averages, if you're using something else, use them consistently. Let's see, well, what other questions do we have? Best time frame for option buying. I think it depends on how you're trading those options. So, are you trying to trade longer term? Are you trying to swing trade the options? Are you trying to day trade the options? If you're trying to day trade options, here's how I did it. So, I would look at options that are expiring at least 1 week away, if not 2 weeks away, and I would buy at the money or as close to the money options as I could. And the reason why is because if you're day trading, the spreads of the options and the spreads of the options can widen very quickly, and the price of the option can also move very quickly. If you're buying options that are at least a week out, if not 2 weeks out, then you have more time value baked into the price of the option. And so it's one less thing to worry about and one less thing that's going to cause the price to jump and liquidity to also dry up, especially if you're buying close to the money. If day trading options, the whole idea is that you want price to move and you're trying to get that volatility and trying to get that leverage. If you could take off some of the other negative variables along with it, things like liquidity drying up because let's say you wanted a cheaper option. And let's say that you're day trading options and you wanted a cheaper option, right? Like, oh, I'll buy the cheaper option and I want to try to buy more of this cheaper option. So let me buy out of the money. And sometimes that works, right? Like if price starts moving in your favor, you start to see price expand and it's fantastic. But what can also happen if price moves against you is that that option could be worth absolutely nothing in a heartbeat. Not only that, it could be liquidity could dry up and you might not be able to get out of the thing. So that's the reason why, if I'm day trading options, I want to buy as close to the money as I can. I want to buy at least 1 week, if not 2 weeks out from expiration. And a third thing, I want to make sure that the options market is liquid. The first way that I'm going to do that is to make sure that the underlying is highly liquid. So typically, uh, a million shares traded per day. That's going to give you some kind of liquidity in the stock itself. In most stocks, right? Like I'm not talking about stocks that are trading, $1, $2 a share. No, like I'm talking about stocks that are trading $100 a share. It's stocks that like your Teslas, your Apples, those kinds of big mega cap stocks. Loads of liquidity, very important for options. Then looking at the options themselves, does this stock have a liquid options market? One of the ways that you're going to be able to tell that is by just by looking at the bid and the ask, looking at the spread. And if the spread is a couple of pennies, then you know that it's very liquid. If the spread is more than 20 cents, then you know that it's not liquid. So those are some of the things that I would be looking at when trading options. Let's see, what other questions do we have in here? Scroll back down here on Instagram. You know what, too? Let me double check Twitter to see if any comments are popping up on Twitter. Yeah, well, we stream this on Twitter and on YouTube and all these other places. Twitter's a little odd. It's hard for people to leave comments. So if you're leaving comments down below, yeah, I see a couple of likes on there on Twitter. But if you do have a question, type it right underneath. Like leave a comment there. I'll keep scrolling over here on Instagram and see if any other comments came in. What can be our basic RTR as a beginner? Explain well what RTR is. I want to make sure that I understand what you mean by RTR. Let's see what other questions do we have. How much do we have to decide RTR as a beginner? So yeah, explain what RTR is. If well, we could go into RTR, but just explain what that term means. Another common question about beginning with trading is how much money do you need? You could start out with any amount. The idea is having the proper expectations going in. And there's actually a story that I tell in this book of somebody that I was mentoring. He had just started out with a little bit of capital, and he was doing fairly well. He started to get a little bit frustrated. And the reason why was because he was not getting enough return that he wanted. So he was looking at his account, and he was like, look, even if I were to get a 100% return every year, it would take me about 10 years to grow my small account into just a 100 grand, right? Like I want money now, right? So that's a mindset problem, because like let's say that you're returning 100% per year, that's extraordinary. That's putting you in the top 0.0001% of traders on the planet. That means that you're one of the best on the planet if you're able to do 100% returns every single year. If you're trying to grow a small account and you're getting 100% returns every single year, well, that's one, that's great, but two, you need patience, right? You need a certain level of capital in order for trading to start to really pay you. But the thing with trading too is that you're developing a skill set that you could have for the rest of your life. And there's other benefits to learning trading too. If you become someone that's capable of not just having a 100% return on one trade, right? Like you YOLO to trade, and all of a sudden this trade goes to the moon, but you're somebody that's able to generate 100% returns year over year over year over year, the world is going to be your oyster. Even if you have a small account, somebody will want to hire you if you have that kind of track record for success. People will want to give you their money for you to manage it for them if you can prove that you have that track record of success. So there's loads of avenues if you're able to get good at trading and establish this kind of track record for yourself. But if you go into trading with the mindset of, oh, well, I need to, that 100% returns isn't good enough. I want to turn 5 grand into 500 grand next year. Yeah, you're going to end up blowing yourself up. You need to have a certain level of patience. You need to have the proper beliefs going in. And all those things were things that I personally learned the hard way. And these ideas are common among so many people. And again, that's why I wrote the Trading Mind Wheel and why it's being put out there right now and why I hope that you get it. So go to tradingmindwheel.com right now and one, pre-order the book, two, sign up for the conference. The conference is free. And three, grab all the other bonuses that are there that are coming with the book. So that's it for today. I hope that you found this morning coffee with Mike helpful. Any additional questions, pop them into the comments, watch the recording, and I will see you back here tomorrow for the next edition of Morning Coffee with Mike. Take care, everybody. Much love. Peace out.